Yeah, double. 2 times. Twice as much profit. One of the critical things that I've been showing you is how seasonality is an important consideration when making money. So because we've been in a seasonal bull market, we've been basically saying we should be having at least 50% bigger positions and really should have double size positions, which means that in this bull market we've been making double profits. Hey everybody, Courtney Smith here for our TradeSmith, for our weekly video newsletter for Monday, December the 12th. This, of course, is a never-ending disclaimer that you need to memorize, tattoo on your kids' forehead, whatever. All right, let's take a look and see where we are now. Once again, we're kind of in a mixed bag, but still, price action is king. The price action is bullish, but there's a lot of little factors that are kind of like making me nervous. Not that we're going to see a bear market, but still looking for some type of a dip here. Okay, let's take a look at the S&P 500. Skyrocketing price action. Gotta love it. Gotta love it. And notice that the purple predictor, which is one of the things that's been nagging at me, is accelerating even faster than the stock market is. Now, what does that mean? Well, you see, the purple predictor is kind of an indicator of the smart money. And so I think the smart money was just not convinced that this bull market, this Trump pump, was really sustainable. And now they're piling in, getting in, finally saying, you know what, we better get in now or we're going to miss the rally. This is particularly important for mutual funds, which have to report at the end of the year, and they want to have this portfolio that looks fantastic. So looks like we might get kind of a squeeze here on the end of the year as people start to actually believe that the Trump pump is a sustainable bull market. But hey, look at the purple predictor here on the Dow Jones. Unbelievable. Look how much lower it was than the price back at the beginning of November, and now it's caught up to the price, which means that the purple predictor has dramatically outperformed the Dow and shows excellent support for it. Now, also, purple predictor is looking very good here for the NASDAQ. NASDAQ finally went and made new highs. The one thing that bothers me here, though, is look at the green line. The green line, the prices made new highs, but the green line, which is the RSI, did not. That's a daily momentum divergence and usually means the market will sell off for 2 or 3 days. No big deal, but, you know, hey. Okay, now this is what I started out by talking about. Incredibly bullish. We broke out back in November to new highs, and at that point I told you that we needed to have at least 50 to 100% bigger positions. So if you normally buy 100 shares, you should be buying 150 or 200 shares, because the context, the environment of the stock market was now seasonally bullish. That has been great advice and has paid for your subscription for the next 400 years. All right? So now, once again, something bothers me a little bit on this chart. Number one, we're not getting that higher high on the RSI, but the price action skyrocketed. Here's my strategy, though. For right now, I'm counting the context. I'm counting the environment as seasonally bullish unless it breaks below that purple line at 130. Okay. Seasonality, we're supposed to dip into the middle of December, then skyrocket. But as you can see, we've actually going up when the market's supposed to go down. That's actually super bullish. When the market goes up when it's supposed to go down, what's it going to do when the seasonality turns bullish? It's going to skyrocket. Yield curve still keeping a cap. We're still not going to have an explosive, 35 to 50% bull market. Not going to happen until late this time next year. And then look at how the yield curve accelerates. The yield curve predicts the stock market a year in advance. Asset allocation, wildly bullish. Wildly bullish. Money is flowing out of bonds and into stocks in enormous quantities. Our risk indicator shows that people want to be in risky assets. They don't want to be in conservative or hedged assets. Global shares starting to perk up. Not still, there's some, Australian shares are starting to look good, and we might start to be adding some other markets here over the next several weeks. But right now, in general, I'm standing aside, except for my little Greek market. Yes, another nice winning trade. Told you to get in around 750. We're already up around 825-ish in just a couple of weeks. Sweet trade. But even better than this sweet trade that I gave you, how about this winner? Mega winner. Oh my God, this thing has just been skyrocketing like crazy. And notice that it's accelerating. But you got to buy the DXJ. That ETF, you don't buy the EWJ, you buy the DXJ because it gets rid of the effect of the Japanese yen, which is plunge-o-rama right now, okay? So DXJ, sweet trade. Hopefully you've got that in there. And of course, I know you're going to use the proceeds to subscribe if you're a freebie. All right, bonds. Doing exactly what we said. We keep getting this little RSI divergence. That's the green line. And we keep getting 2 or 3 day rallies. And then we go plunge to new lows. That's really bearish price action. And look, on Friday, we closed on the low of the day, of the week, of the month, of the year. If there isn't a definition of a bear market, I don't know what it is. Okay, not much new here. Let's carry on. Dollar. Okay, we got the little sell-off that I told you about based on the RSI divergence. In fact, it went a little bit further than I expected, and now we're starting to rally. Thursday, monster up day as bad news came out about the euro, about the tapering from the ECB, and then it completely reversed. It completely reversed and the dollar started skyrocketing again. So this looks fantastic. If you're not long the dollar, which I've been telling you to be long the dollar since around 96.50, and we're up around 101.50 now, if we break that horizontal green line at about just above 102, that's the next place to buy or add to your position. All right? Gold. Well, gosh, that looks like a pretty sucky chart if you ask me. And so I still got to be on the short side of gold, which I am. I'm short gold. Now, our indicators are starting to look a little bit better. Up at the top, still kind of negative. The middle panel of the CRB is actually bullish for gold, and the bottom panel, which is the yen, is bearish. But gosh, even having one of them up is an improvement on where we were recently. And finally, the oil market. They say they've got another agreement at OPEC. I don't believe these guys. That's about as far as I can throw them. Nonetheless, the market believes it, and that's all that matters. I put a red line up there because I think it's going to be very hard for this market to break above that level at about 52.50. So I don't have a trade on right now. I'm going to stand aside. I think I just can't get excited about the fundamentals, so I don't really want to buy the breakout. On the other hand, it is a bull market, so I certainly can't get short. So I'm standing aside on the oil market. Hey, freebies, love having you here. But listen, with all those monster profits we've been giving you, why don't you subscribe and become a fully paid up member? We'd love to have you there. All right, fully paid up members, hang on just 1 second. We'll get right into our specific recommendations.